Well, hey there, everyone. Hope folks are doing well in this exciting week in markets. I just got off the phone with Rob. He's still traveling, meeting with important folks in the industry, and super excited about that. And I'm super excited about the market and, of course, the tools that we have available to help us identify risks and opportunities. Let's go take a look at where the market is right now. I'm going to take you right into your daily candlestick view of the S&P 500 using the Champion Trend Pack of indications. What you can see on the very left-hand side of the screen is the S&P E-mini futures on a daily basis. Each candle is 1 day of trade. Now we can see that the fact of the matter is last Friday we got a bullish reversal that signaled for us a potential rise into Monday. What happened? Well, the candlestick came down below and opened below the champion cross buy zone, which is that green shadow that you're seeing me highlight over here, and then, of course, closed above it into the end of the day, implying a potential move higher into the beginning of this week. We got it. We got 2 days of indecision, a big scare down yesterday with a bullish reversal, and today we got a bullish move up, and that bullish move up came with a breakout forecaster line. Now, is the market signaled on a day-over-day basis to likely move higher? Well, the toolkits do suggest a likely move higher. However, the top end of the champion trend sell zone must be cleared. And tomorrow morning, we've got data coming out. It is the core PCE price index data. The inflation data is key and paramount for market participants, and technicals are one part of the mix. If we see price action tomorrow morning breaking out above roughly 40.78 on the S&P E-minis and continuing higher, and of course opening into the cash hours, moving higher, we've got a stretched market. There's no question about that. And you can get a sense of that with the spike tool at the bottom of the screen, where the slow spike is above the top of the channel. But take a look at what happens when the slow spike gets above the top of its channel. We do tend to have some moves for several days higher in the recent past. Now that's already taken place. The data tomorrow has some risk of disappointing from some of the work that I'm doing behind the scenes here. And what I can tell you is having more of a tactical view for intraday trading makes a lot of sense as we see mega cap stocks release their earnings and have important inflation data points. Nonetheless, the technicals suggest we are likely to move higher. The breakout area is roughly that 40.78 to 40.80 area on the S&P 500s. And that could then take us up towards 4,100 to roughly 4,130. Now, if you think in terms of the SPY, not in terms of the ES, I'm going to bring you to a chart of the SPY, daily candlestick charts, and just give you a view of where we could get up to. We closed at the hard right edge, as you can see over here, at around 404 and 60 pennies. That's the candle at the hard right edge. If we get a cooler than expected inflation print tomorrow, the idea would be break out above the year-long plus downtrend channel we've been in and make a higher high than the highs that we saw near the beginning of December to mid-December. That effectively would break a downtrend pattern and would be very significant if we are able to close, and really closing above the highs right there on this particular day, the 13th of December, where the SPY got up to areas in the 409, 410 area, would be a bullish signal. Now, we, of course, are looking at a market that is already stretched coming from January the 6th, where we got a big move from data, weaker services manufacturing data. Getting up above that 410 area and staying above there would still put us in a very overbought and extended condition. Nonetheless, it's a bullish signal if it does present. Now, if I take you back to the technical pages right over here, where you see that the daily chart suggests likely higher, the 4-hour time frame suggests likely higher. We're above the champion cross buy zone. And of course, you can see the test that happened today, where we dipped into the champion cross buy zone and bullishly reversed back above and continued higher, just like the indicator suggests is likely to happen. Well, all of this is good news, and now I can take you down to an hour time frame and corroborate the same. The key level that we'd have to be above into the open of trade tomorrow morning is really about 10 points higher than where we closed. Getting above there does open the door for us to continue higher. Now, the risk is we have a pump and dump. If we get a pump and dump, well, it would not be strange to me. And the reason why is we've got a dollar that is sitting in a spot inversely correlated with the market, and it's at risk of potentially rising. I'm representing the dollar here using the UUP ETF. What you can see over here is that we had a pump and dump on the dollar. It closed below the center of its pivot range, but it is in a signal state suggestive of a rise. That rise is coordinated very well with the long bond suggestive of moving down. Rates up, dollar up, long bond face value down, and that could effectively hurt precious metals and, of course, potentially hurt the market as well. If we get a cooler than expected print and market participants are all right keeping the market above 408 and about a quarter, great. Above 410, we are now breaking into an area that suggests we are in an uptrend that may be here to stay. Now, how long? Question mark. And the data, of course, is news. It's event risk. We want to take great care into tomorrow morning, especially on precious metals type positions. And we want to make sure that folks that are out there using the Champion Trend Pack of indications, which I'm going to bring back on your screen over here, we can see that the suggestion from the indications is up. However, news is coming in tomorrow morning, and it's not as if the slow spike on the daily chart is at the beginning of its race. It is already at the top end of its race, but using that high octane fuel. Same as the 4-hour chart, same as the 1-hour chart. The expectations for how long we stay moving higher is limited to less than 3 to 4 days from a rough calculation standpoint, and that would be anecdotal from my standpoint. I hope that this gives one perspective. We may be able to rise here, but the sustainability and durability of that rise is questionable. I wish you a wonderful rest of your day. I hope you enjoyed this video. Big shout out from Rob to say hi to everyone. He's looking forward to getting back on the horse and getting insights out to you as well. Should see some videos from him as we move into next week, and of course some from me as well. I wish you a wonderful trading day tomorrow and a wonderful rest of your day today. Bye for now, folks.